Good morning. We are staring at a weak start this Monday morning, even as history will force you to remember the Black Monday 25 years ago when indices across the globe tumbled. The moment could be choppy with the F&O expiry. The market traded in a narrow range last week, mostly between 5,630 to 5,740 and ended with marginal gains. The holiday truncated week will also see hectic activity in bank stocks ahead of the RBI policy meet on October 30th. The Asian markets are in the red. Besides the US market fall, the Asian markets have to deal with a drop in Japan's export too. US markets suffered a fall of nearly 2% hurt by earnings disappointment. Last week saw the market cap of top 7 companies declining, led by Reliance Industries. On the other hand, ITC, SBI and ONGC witnessed gains. Report states that the stake sales may be in the offing given the improvement in the sentiment in recent months. The dollar rose against the euro and Japanese yen but slipped versus the British pound. While the FII continues to remain more optimistic about the Indian markets, the domestic funds haven't really stepped up their buying as yet. The FIIs were at buyers of Rs 801 million in the cash segment on Friday, while the domestic institutional investors were at buyers of Rs 1.12 billion as per the provisional figures released by the NSE. The foreign funds were net buyers of Rs 7.24 billion in the cash segment on Friday, while the mutual funds were net sellers of Rs 1.68 billion on Wednesday, according to the SEBI figures. Other news in the media are ONGC is in talks to hire Reliance Industries' unutilized production facility at East to quickly bring to production its gas finds in Krishna Godavari Basin. The empowered group of ministers and telecom has endorsed in principle a proposal to rescue BSNL and MTNL by bearing the cost between Rs 120 billion to Rs 130 billion for the one-time payment to keep their spectrum allocation beyond 4.4 MHz. The RBI has considerably softened its stand on foreign direct investments that have inbuilt options, settling for a one-year lock-in on such investments as opposed to 3 years it wanted earlier. Out of the major crops, both food and non-food is expected to decline by about 2.3% in 2012-13 as sowing has remained sluggish. The Food Ministry has opposed a proposal to give a bonus of Rs 130 per quintal to farmers over and above the wheat support price for the next season, saying the move would lead to increase in subsidies by Rs 50 billion and fuel the price rise. Moving on to recommendations, the technical call for the day is: we recommend going short on Axis Bank November futures below Rs 1,205 with stop loss placed at Rs 1,235 and for the target price of Rs 1,145. Our derivative strategy for the day is short Hindustan Zinc October futures above Rs 133 for the target price of Rs 129 and a stop loss placed at Rs 135. Thank you. Wish you have a great day ahead.